The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. We got the S&P is currently down 7.5 points. We got the Russell down 8 points right now. Nadex currently up 10 points on the day. And with Apple earnings coming in last night, let's check out the Dow. It's currently down 55, and oil's down $1.93 on the day there. We got natural gas. It is almost flat on the day. We got corn down just $1.25, basically flat on the day, and we got soybeans down a single tick. Looking on over at euro dollar, it's down 23 pips. Aussie dollar getting slammed down 139 pips on the day. Pound dollar down 35. Dollar CAD currently up 21. Dollar franc up 15. Euro yen up 98. Pound yen up 92. And US yen up 81. So the dollar stronger across the board. We got gold currently down 14 points with silver currently down 1%. Gold down 1% as well there. Copper down almost 1% on the day. And Obama's about to do a little speech coming up pretty soon here. And let's see here. Scheduled for 12:55. They're clapping for him. Got a bunch of people in the background. His normal MO of pulling random people off the street and sticking them behind himself to make him look more approachable, I guess. Anyways, but so that's up, and he'll be coming on and talking about the economy. And he's going to do a whole series of speeches about how they're going to rebuild the economy for the middle class and fight and make it happen. So, anyways, get ready for who knows what kind of interesting moves, especially if they allow open Q&A on the speech. But that'll be coming out right now on whitehouse.gov. And let's see, what can we check out? Well, let's go ahead and look on over at the fundamentals that came out today. And last night, pull up some trades on that and look at each one of them. Give me 1 second here. I'll open it on up. And we had an Aussie report come out last night. That was the one report. We had about a 50 pip expected move from high to low. Well, we moved, let's say the low right here was about 92.39. And we got a high up here, about 93.17. So we definitely exceeded our 50 pip high to low. It basically popped up enough to where if you would have said, oh, you know what, the number didn't come in at the divergence that I talked about on the show previously, didn't come in at the expectation, I can set it to break even to cover the other side's trade risk. You would have got filled on that one. And then when it fell back down, you would have got filled as well. So you actually could have had a one-to-one trade, but it would have been because you're going for break even to cover the risk on the other side. So if you're, say, risking $15 on one side, it moves up, you take profit at, say, 15 pips above where you bought, and then it goes down and you take profit 15 pips below where you sold, then you actually could have netted out, like I said, a one-to-one on that trade, but that would not have been the way you planned to have done it. So, but it's pretty cool how the pieces did line up for us, and you're able to go into that. I actually was going through and doing an explanation of spreads last night to somebody, and so that's why I have all those drawings right there on my chart. And so let's look at the Aussie dollar with the reported head that it came in. It came in, they had the CPI number, basically came in a little below expectations, but nevertheless, the dollar getting stronger more than the Aussie getting weaker led, because, you see there wasn't really a major move off that Aussie announcement besides that initial spike. It went down a little bit because the CPI was lower. However, again, nothing major, and then Europe opens up and we get the dollar getting a lot stronger. Moves on down. Makes a nice solid move on down to actually 1.5 deviations. So it's at half a deviation. It literally just sits right there. And again, you can get these deviations. We update them on our site and the diagnostic members area there inside TFNN every night at 8:15 p.m. And so right here, it's just hovering right along half a deviation. Goes on down to 0.7, decides to do a little bounce between that. Hits the 1 deviation, bounces right off of it, stays up there for about 10, 15 minutes. Before it drops on down to 1 deviation, moves back up, or down to 1.5, moves back up to 1 deviation, back down to 1.5. A little bit of a swing trade there, has now broken below the 1.5 deviation mark. So that's our Aussie dollar. Basically news for the evening. The HSBC Flash Manufacturing PMI came in on China, and it came in a little worse than expected. We got a 47.7 on a 48.6, and that number came in at 9:45 p.m. Didn't really rock the markets. There was a little bit of a move on that, but had a little bit of an impact across the board, just being, obviously China. Let's go ahead and check out today. Today we had the Flash Manufacturing PMI and the German Flash Manufacturing PMI. The German one is the one that we're a little bit more concerned with. We go in and check that out over on the euro dollar. Both of those came in better than expected. The French one, not as high of an impact, but let's look at it right here. We can go in and we can see, again, 3 a.m., and the market, moved up, but right here we got a little initial spike on the French one, but then a little bit later, 3:30, then we had the German one. That's the one that we expect the larger move on. And we got even probably a little bit bigger. I expected about a 30-pip move. We got about a 40-pip move on that. And it popped on up basically right to half a deviation. Stayed on that level for a while before it pulled back down. And now it looks like right now it wants to move back down to 1.5, or to past settlement on down to negative 0.5. We'll see if that holds up through the end of the day. It all depends upon sort of what comes out. Honestly, I think the biggest thing right now is what comes out of Obama's mouth, and any open Q&A that he does on his speech here will have the biggest impact if there's anything new or surprising. So right now the markets are not responding well to anything he's saying, and they're selling off at the moment. Let's go ahead and check out new home sales. That came out at 10 o'clock, and usually not just a massive market mover. And one of the trades we're looking at was the U.S. yen. I talked about how has basically 0% of the time for the last 2 years is it broken 50 pips. And it stayed true to form. So, again, that number came out at 10 o'clock this morning. And you can see right here, sort of a non-event. Went up about 20 pips or so. And then came back down, about 20 pips or so. Stayed right within about a 40-pip range. Didn't really break out of that, average 50-pip move. And so really didn't expect anything major. It was a good butterfly trade and worked out rather well. So when it fell down, you were actually able to close out the sold butterfly. And then when it moved back up, you were able to close out the long butterfly on that. So again, a nice trade on the butterfly right there on the U.S. yen going into the new home sales, which did come in better than expected. So we've had a lot of positive news come out. But despite all that positive news, it comes down, there's a lot of different things that come in, but despite all that, we're still seeing the dollar move up and the indices, like I said, moving into more negative territory. We can look on over and check out, Apple. So pull that up real quick, and you can see just a massive move right there. So 441 got a nice 20-point move. It's maintained and actually held on to that this morning. It dropped off a little bit of it last night on the open, but then went ahead and pushed back and reclaim those highs. We'll see if it's able to end up on the day. And then NASDAQ, we go in, and of course, how does Apple affect NASDAQ? Obviously, it's one of the largest components, along with Google, of NASDAQ. And so on that one, let's back out a little bit more because we're going to see the overnight action here. We'll back on out to 10 minutes. And there we go. So right over here, we can see where the news came out, and we got this nice pop. And then it pulled back down, popped back up to 1 deviation, pulled back down, almost looked like it's trying to hit settlement. NASDAQ has not yet filled its gap. If we go on over to Russell, we can see the Russell has filled the gap. We'll go ahead and let's check that out. So right here, it filled it pretty quick. It went in and just headed straight down, hit settlement, hit 0.5, hit 0.7. And now it's, it's sort of hesitating, pausing. There's been a lot of order flow, though. We'll see if it's able to go back up towards that order flow. I was checking out the depth of market on Russell earlier, and there's a lot of orders higher than the market. So either they're pushing it down, they're trying to manipulate that push down. We got about 90 orders right now sitting at 1041.2. We have 150-something orders sitting up at 1042.3. So in that 1-point range right now is where we're sort of seeing the oscillation due to the order flow being stacked over there on the depth of market. All right, let's go ahead and look at the S&P. So on the S&P over here, we can go in and look at the move on down from 0.5 to 0.7. And right there, we're sitting right there at the 0.7 deviation level. And so sort of, across the board, everything's sort of sitting right at a deviation, trying to decide if it's going to make another big move for the day. And, of course, looking at what earnings are coming out across the board that will affect each of the indices as well. Right now we're sitting at a negative 0.5 on the Dow. Let's see here. Now let's go in and let's look at our ags. So corn sitting relatively flat at the moment. Had a little bit, but decided to go ahead and move to speak upon what contract you're looking at. So if you're looking at September, you're actually down a full deviation on corn. If you go in and pull up the, let's see if I got it in here. If you can pull up the November, which is the active future. September is what Nadex is on. Look at the active future. Then not near as much movement right there. We're pretty flat on further back month on soybeans there. And then on the corn, let's see here. Pull up Z, C, and then we'll go to 12, 13. And so on ZC 1213, we can see it's really been pretty flat. So the further out months on the ags, pretty quiet. The closer months have been a lot more volatile. And again, the Nadex is actually following the front month. So that's something that you can take advantage of right there with, despite the lighter liquidity on the futures market, you can still trade them with the defined risk and the liquidity over there on the Nadex spreads. That wraps up our ags. Let's go ahead and check out our energies. So we got oil inventory report today. And oil inventory report actually came in a little bit bullish. But despite that fact, the market decided to go ahead and rise on up. And so let me see here. I'll get that exact number for you. And we'll look at that one. So oil inventories were released at 10:30. Came in at negative 2.8 on an expectation of negative 2.5 million barrels of oil. That was slightly bullish. We did get a little bit of a pop in oil. However, the reduction was not as big as it was the previous week. So last week it came in at negative 6.9. This week it came in at negative 2.8. So we got that big move up last week, and then it pulled back down. And oil really, it can be pretty crazy on these inventory reports. And, but it's been a nice, solid, just downtrend for a good chunk of the morning after that. It really was already sort of downtrending, but then it went just to chop mode for the first part of the session. Oil inventories came out, it did a little pop up, and then it reversed, and it's just been trending straight down ever since. The next thing we can go in and check out natural gas. So oil inventories again sitting right at a minus 1.5 deviation on oil. Probably pretty done for the day on oil as far as a down move. We have not got a trailing stop to keep moving down. We basically have a trailing stop up there at the 1 deviation level at the moment. Checking out natural gas. So natural gas right now, pulling that on up. We got it sitting at, it sort of went below settlement, above settlement. It's back below settlement. And just being really, really choppy across the board. And we'll check out the Forex and check out where the FX pairs are right now. Where is that FX moving with that dollar getting all that strength? Where's everything going? We'll talk about that when we get back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So right now, checking out our daily gold trade, seeing if we got anything that's lining up. Don't got anything on the silver side of things. It's wrapping on up. But gold, we do have, looks like a trade at $13.20 right there. We could sell a $13.20 contract. I was able to get it in there for $19. And right now it's at $11.50. It's sort of bouncing around. So, you know, if you can get anywhere around, $20, plus or minus $5, like $15, could be a good solid trade for you right there. You can still get it in for 10. It's 11. I mean, it'll move quite a bit over these next couple minutes. We got about 6 minutes until expiration. And again, I do this each and every day. I try to go in and see if there's a good trade set up right there. And so we got a $13.20. And what that means is the market has to basically expire at or below $13.20. Okay, so right there. And so if it'll stay below that, we're profitable. Now, if it hits the strike, all right, can't repeat this enough. If it hits the strike, you just got to take it and get out. Okay, so don't forget. That is the rule on these premium collection trades. If it hits that, you don't want to be sticking around in the trade, and because the risk is too high to make it worth it. It's easier to go back and just make back another 20, 30, or 40 bucks than it is to make it back to 90 or whatever. You lose 75 bucks on the trade. So, and even though 20 or 30 sounds small, you do 10 of them, that's 200 bucks, right? So you do 20 of them, that's $400. So these trades actually can be very profitable for you. There's plenty of liquidity sitting in the market, and you can go in there and take advantage of them. So as gold moves down, you can just take piece by piece. and take advantage of it. So anyways, right now, I mean, it's moving down. We got it down to about $10 on the ask side now. So it's moving down further and further. So there's, my ticket right there, and of the trade that I put in on gold. So it's sort of nice. It's like right in the middle of the hour. It's 1:30, so it's sort of a cool trade you can do. And there's 21 of these expirations around the clock that are happening. So you can take advantage of a lot of different expiration times on the market. And I mean, whether you're doing this at night, in the morning, in the afternoon, whatever. And the big thing is just, you're going for probability. And so you're going to have a higher risk, and therefore to reduce your risk, like I said, just exit if it hits the strike. Okay? So that's really the way that I do the trade. I go in, I find one that lines up, I look and see is the trend moving in that direction or sidewards. I can basically see a downtrend here. We are a little bit sidewards as well, which does make me a little bit nervous. I like to see a pure just down trend. We're getting sort of oscillating up-down bars right now, but we have at least been trending down, and we're sitting right there at the 1 deviation level on gold. Okay, so we're literally sitting right at that 1 deviation level. And so that could always bring up a trade. You could always think, well, what if I could get a trade on? So if there was actually a strike below the 1 deviation, we're sitting right at it, that could actually be a trade in and of itself, where you could hop in and you could maybe buy on that level. So, but just make sure you control your risk on the trades. It's not that they're perfect, and it's not that they're always going to win, but in all trading, risk management's everything. And so I just always want to remind people of that, so that way they know, hey, when it gets there, I'm going to get out. And if it gets out, take it. Move on. Go to the next trade. All right, so what other trades can we check out today that we might be able to look at? That's our gold one right there, but we may have some other ones that could come up on Forex. We got, FX is getting hit really hard. Indices are getting hit really hard. So we can go in and move on down here, and we'll see right down here. Okay, so we got some FX trades coming up later in the hour at 3 o'clock. There's quite a few lining up. I mean, you got like 31.98 on euro dollar. Now, it's a little early to be hopping in on them, okay? So, again, a little bit early to hop right in on those. And you can do it and but just do the premium collection on the trades. But let's see. Yeah, again, if it gets there. So it's pretty close. This is going to be a very, very close expiration trade. And, right within this 10 minutes here we're going. So, I mean, it literally hit it and came right down off of it like within like a half a second. So, on that trade, I mean, that's just incredibly close. You have very, very small amount of time. This might even be a trade that you're like, you know what? If this is too close, it's not worth it for me. What do I do? And you can hop out. So I like to remind people that you can get out of the trade. You're not locked into the trade for life, forever, whatever. You can hop in the trade. You can hop out of the trade, and exit it. But you have to do it in those last 2 minutes. Or before those last 2 minutes. If you don't do it in those last 2 minutes, okay, then you're really gonna hose yourself on that. So if you don't do it before those last 2 minutes are up. So it did pop up there. It touched it. It was in the 2 minute window, so it wasn't able to get out. But it looks like it's moving down. If it stays down here for the next 30 seconds or so, we'll have profitable trade. I'll let you know about it when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So someone sent me a message asking, what are the settings I use on the scanner to do these premium collection trades? And so what you do is you go down here and go to live, okay? And then, set this to, 60 or 65 to 95. And then I'll say expiring within an hour, and I'll choose the market that I want to trade. So by doing that, I'm able to basically filter down from, instead of having hundreds of them, to having just the ones that I'm interested in. For that market right there, and then I can scroll down and I can see the ones that actually qualify, if any, and makes it really easy to find the ones that qualify. And so if you want to do that, then that would be how you would do it. So right there, and that ought to take care of that for you. Anyways, but that should take care of that, and then let's see, what else do we have that we could look at? We could look at, we'll check out the 3 o'clock ones as we get a little closer. So these indices have been amazingly selling off. We're down like 2 deviations now. So on some of the forex pairs, and even gold still just lighting up the screen, moving on down. So and now it's actually broken through that 1 deviation level and moving lower. So we definitely have moved the stop down. If you're in gold futures contracts, of course, you could still be trading, and they're going on down there. All right. So, what can we do with the other markets? We're going to go through the FX pairs. Let's check out the Aussie. So, the Aussie dollar right here. What do we got? And on the Aussie, we got to move down from 1.5, actually down 2 deviations right now. So, it's just pushing and trailing that stop further and further. So, again, when it closed below the 1.5, you can trail the stop again. And next target there, we're at almost 1.5 really deviations. The next target on a third deviation, which would be a 99.7 of expected move, would be 0.9090. And let's look over here at the euro dollar. And we can see it's currently down 0.5, down 0.7, not breaking the 0.7. So we'll see if we get a rebound in euro dollar, but it's looking pretty weak. So, and again, it's not the euro so much as just the dollar itself showing that, continued increased strength. And we'll see, if that continues to go. But the treasuries, are declining. There's a weaker than 5-year average, auction, but the dollar's still gaining in that entire process. And let's go ahead. Let's check out the pound dollar. Let's see what I want to look at. The treasuries. Let's see, had a $35 billion 5-year note auction. It was met with weaker than average turnaround. The yield on them was 1.41% compared to 1.484% last month. So, and apparently that's the most since July of 2011. And it was even lower than Bloomberg's news survey estimation. And 21 primary dealers involved in that. So it's really weak that they're having to absorb all this and these low payouts. And people are expecting rates to go up. And so, it's really, really interesting, the lack of demand to go in and buy these treasuries right now. And anyway, so just be aware of that. And let's look at, so we got pound. It is down right now, sitting at 1 deviation. And the news on the pound, we had the only real thing we had last night or this morning, I guess you could say, is actually the CBI industrial order expectations. Came in at -12 and an expectation of -12. So again, that was really more dollar movement than pound movement, but just a massive move. Right there. Off settlement, we just went down 0.5. We paused for like a second there, went on down to 0.7, broke right through, but came back up to it, and then right on down to 1, bouncing right off the 1 deviation. Let's see here, going over and checking out the dollar CAD. And let's look at 0.5, 0.7. We're up 0.7 right now on dollar CAD. And again, the dollar is just rocking it. So the question is, at this point, now that we're at all these major deviation zones, can it continue to carry that strength in, or are we going to start seeing a turnaround, start seeing the dollar finally get a little bit weaker here into the last hour of the pit trading session? We can start seeing the indices at this point. Would not be surprised to start seeing a pullback, but you got to see it happen first, right? But this would be points where we'd be looking at that. And let's look at the dollar franc. So we got on the dollar franc, and we'll pull some of these up a little bit closer to the end of the hour, see if we can maybe find a couple trades. And we got the dollar franc at 1 deviation right now, so it could be looking pretty exhausted as well. And we got dollar yen, so a lot of things sitting right at their deviation levels. And dollar yen is it's sort of broken above the 1 deviation, been sort of stayed above there. Hasn't been able to move on up to 1.5 deviations though, just barely, just 10 ticks above it. So it looks like all the dollar pairs might start at this moment actually start flipping and going the other direction. And so I'd be looking for a very potential setup for reversal on that. To be able to go in and do some trades over there based on a turnaround in the markets. And we could also look over at some of our other pairs. Let's see, I'm trying to pull up a couple other things I want to see right here. But we could check out also, just make sure on your indices at this point with the turnaround starting to happen in the dollar, we could start seeing the pullback. But let's look and check it out. Yeah, we're sitting like right at 0.7, right at it, okay, on the S&P. And we go on over to the Dow. And we're sitting, haven't even quite hit the 0.7. So it's really trying to bust below these lows here, but it's not doing it really with any kind of conviction at this point. So it might have burned out as fuel. We'll see there. And we got the Russell. I bet it's doing about the same thing. Russell actually has a little bit more umph in it. It is still trending pretty solid down, but hasn't been able to even reach a deviation yet. Now, it's had a deviation from high to low, but hasn't been able to hit the one deviation from settlement price at this moment. And then to go back and do one more recap over here on the NASDAQ, which has sort of been the leader for the day, is, obviously back heading towards settlement, almost filled that gap in after the nice run-up it had due to Apple's announcement. We'll see if it's able to, push down and get that last final bit. Okay, well, that wraps up the indices, the ags. That wraps up the energy sector, the metal sector, and the Forex pairs. What news do we have on docket for the week that you need to be ready for? Okay, because either you need to mark them on your calendar just so you're aware they're coming out, or mark them on your calendar because, there's a potential trade setup for you. Right? So either whether you're trading them or whether you need to be aware of them for your trades, either way you need to be aware of them. Tonight we do have the New Zealand dollar coming out at 5 o'clock with their official cash rate and rate statement. They're at 2.5% right now. It's expected that rate will stay the same. But again, that number is coming out, so you want to be aware of it. Let's see if there's anything there that will be actually be impactful, especially if you trade like the Aussie or the yen. It could have obviously a dramatic impact on either one of those pairs after they open back up and you get into them. So be aware of that one, and then let's go in. Let's look at tomorrow. So tomorrow we're going to have a German IFO business climate report. Not really one you're trading so much, but the Euro is going to have a 3 a.m. Spanish unemployment rate, then the 4 o'clock German IFO, the 4 a.m. M3 money supply, and the 4 a.m. private loans. So with all those reports coming out, easily expect a solid 30, possibly 40 pip move on the euro dollar right around 4 a.m. On the pound, we're going to have preliminary GDP. Obviously, one of the most important announcements that comes out on any news or for any country is going to be their GDP. So on that one right there, comes out again at 4:30. And the expectation is that the GDP comes in at 0.6. We're looking for a 0.9 or a 0.3 on it. 70% of the time, the pound moves more than 50 pips, and the average move is actually 70 pips. So if you can get a trade on for around $45 or less to straddle the pound dollar, then that's an awesome move. You can go in, you can straddle that trade, and that's usually a pretty good trade. And the big thing again, if we don't really divert that much from the GDP, if you don't get that big spike, get that profit like right out of the gate, we don't get that big move, then be looking for, an exit at break even. You're usually going to get a spike either way on it of about 30 pips. Okay, so like the spike will be like from when the announcement comes out, like from the price right before to that. We expect about 30 pips, then a little bit of pullback and a move back in the direction. If we hit that divergence, we could easily expect a solid 70 pip plus move. A divergence being 0.9 being bullish for pound dollar, or 0.3 being bearish for pound dollar. Alrighty. Okay, so that wraps up the news of the pound dollar right there. We talked about the German IFO business climate report. You need to be aware of that one. That one's come out at 4:30, and that one's tomorrow as well. So Thursday morning, 4:30 with the German IFO. Actually, it comes out at 4. So my mistake there. I thought it came out at 4:30. It comes out at 4. And then we got core durable good orders and unemployment claims coming out on the Aussie dollar. Not usually the biggest impact lately. So that sort of fluctuates. Sometimes when that thing just moves, and other times it doesn't do anything. Usually expect about a 30 pip move on most Forex pairs, whenever that report comes out. Not so much of a straddle or strangle news trade, because the moves usually just aren't large enough to make it worth it. And but you do need to be aware at 8:30. Those if they're off, they will cause a big move in the indices. If they're off a lot, so it could easily cause like a complete reversal in direction. Okay, and we got natural gas storage coming out tomorrow at 10:30 a.m. So if you're a trader of natural gas, you want to be aware of that. It can also tend to have a little bit of impact, not so much a predictable impact, but an impact on the oil market as well. And let's see what else we have right here. Friday, really nothing. We got the revised University of Michigan Consumer Sentiment Report. It's the revised report, okay? So nothing big that we expect to happen right there when that one comes on out. And we'll have our, so I don't even really look at that one because it's the revised number. But that would be our news caps for the week. And I'm always talking about these, straddles and strangles. And so, maybe we can go in and do an example of one maybe this week. And just do a quick summary for you, okay? If we go in and we're looking over at, say the box spread scanner or whatever, and I can pull that up and show you what that is. Give me 1 second. And we go to the spreads over here. And you can go in and you just click spread scanner, and it's to visually show you what is a straddle. And what I'll do is the settings I'll use, I'll put like a 1 on my risk reward ratio. And I'll usually put, when I'm doing a straddle, only when I'm doing a straddle, I'll put 100 on my max risk. And then let's say I was doing the pound dollar tonight. I click pound dollar. I click both directions because I'm going for both directions there. And then I can go in and I can select a couple that line up. So like right here, I may go, okay, well, I want this one and this one. And that shows me one example. If I don't like that one, I can choose a different one. And try out different ones until I find one that really, matches more with what I'm looking at until I get the right setup. So there's one as well. Ideally, I like the strikes to line up. So we could even go over here. Let's check out euro dollar, see if we find something that maybe lines up a little better. There we go. So 1.280. If we can get, it's not really 1.280 at the moment. There usually will be when you get closer, though. But see, you can make money if it goes in either direction, if it goes far enough to cover the risk on the other side. Okay? So it's a pretty simple trade, and it's not really a costly trade in the sense of you don't have to put up an insane amount of money to do these trades. We just had some really big moves over here. I'm trying to find something that's a little bit maybe flatter on the day. Let's see here. Even crude is hard to do. Natural gas. Come on, let's see if we can find. There we go. All right, there's like a Wall Street 31 that you could possibly go in. Hop in on that trade right there. And put the pieces together. So, as you can see, you can actually build. This is a risk-reward graph. So this is your market. The gray and dark area, that is the live price. And then here's your P&L. And then right here is the price of the market. So, as the market moves up, what will the effect on your P&L be? As the market moves down, what will the effect on your P&L be? And so it makes it really easy to find the straddles. Before the news comes out, you can go in here, and then you would just click on the buy or sell buttons, or buy and sell buttons in this case, I guess, right? Because you're doing a straddle. And you bring up both of the contracts, and then you're able to just place the order. And you can do this for live and demo. We have both data feeds built in, so select your account, live or demo. And then you can actually select the default quantity it fills in the ticket. You can change that quantity, but it fills in that default quantity for you. Okay? The last thing we have, we might have some Forex trades. We'll see if we have any Forex trades here in the last few minutes. So I'm going to drop off gold and silver, leaving my settings on there. And now I just scroll down. So I got all the pairs brought up. Remember, I'm always a little bit more cautious on those yen pairs, okay? But I got all the pairs brought up, see if there's anything sitting there that I think looks possible. Maybe we'll take advantage of. We'll check it out. If there is something, then we'll hop on it. All right, we'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain the this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And we're just checking out a few of the different markets, seeing what might be a good setup. We have a really close euro dollar right now at 31.88, but that's really, really tight. So be cautious on that one. We got a dollar franc right now. It's been trending up, but just here in the last few minutes, it's been starting to push on back down. So I'd almost be more willing to go short on that one than long on the dollar franc, just because of the general direction of where it's moving at the moment. Let's see here. So we'll see how it all ends up and where it all moves. But the one I'm looking at right now on the euro dollar is 31.88 at this moment in time. So, and it's sitting right around 31.84, 31.85. Let's see, on the dollar franc, I'd be looking at 93.87. We do have about 5 minutes left to go on that trade, though. And let's see here, going down, trying to see if there's anything else. I don't really see anything on the dollar CAD, so I don't need to even worry about that. Euro yen, too crazy and too volatile. Not enough money. Pound yen, probably about the same story right there. We'll look at it in a little more detail. And pound yen over here, we got it at 153. What is that right there? 46. Yeah, I don't know, man. I like the pound yen. I love how far away it is, but that just it moves fast. Okay, so just be aware if you're ever trading the pound yen, it moves really, really, really fast. Okay, and so you may be really happy or may not. And there's just not much you can do about it because when it decides to go, I mean, it literally just flies. And so I haven't even really got into trading it with live money on the pound yen. I've been practicing with demo and have not liked the results thus far. So I've stayed sort of shy on using it. But yeah, so we got that 31.88 in right there on the euro dollar. And I just got that one in there for 25.50 on that one. It is a pretty close trade, so just be aware of that. And here in the next couple of minutes, you'll probably want to look at hopping out if it does move back up and hit 31.88. Okay? So, but a little volatility in there, you know, if you get a order sitting in. Now, I got 25. I mean, the thing moves fast. It went 25.20, 15, 15.25. They can move really quick. So sometimes I just stick to my guns on my price I want. Other times, I'll hop in and, you know, just grab what's there. It depends upon what price it's at, what direction I see it moving in. All right, so right now we got that euro dollar heading on down. Hopefully they'll continue heading on down and take advantage of some of this short action that's been happening in the euro dollar. So haven't really got to capture much of that today with other trades that are going on. We got the U.S. yen being the one other possible trade. I've been avoiding the dollar franc. It's in an uptrend, but it was moving down and now it's moving up. Things can't seem to make up its mind. So I'm backing off on that one for the moment. And like I said, pound yen is just a little too nuts. It can move so far, so fast. It can make you very nervous. And it's almost better. Really, what we're working on the pound yen and on the euro yen pairs, because they move so much, is I'm actually working on looking at, is there a way to maybe hop in and buy them for like $20 and sell them for $40? So I had almost the opposite of what I'm doing on Premium Collection, just because of the massive volatility that they have, and to see if I could, do that and take advantage of, that on the trade. So let's see here. What else do we got? Pound dollar, euro dollar. They're all closing out now. So there it is. We're at 31.82 on the euro dollar. We got about 2 minutes left to go on the clock. Minute and a half left to go. So if it stays on there below 31.88, then we're good. And don't have to worry about it. So anyways, hope you all have a great day. Have a safe day. Keep your risk in check. And I'll see you tomorrow right here on the Diagnostic Trading Hour.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.